morning. I'm Maiki Oreta. From markets to policy, from Manila to the world, we cut through the noise so you can navigate, adapt, and lead. This is Business 360. A ceasefire doesn't automatically mean cheaper fuel. The Energy Department says don't expect prices to drop just yet. While President Bongbong Marcos plans to take full advantage of this window, the reality is relief at the pump will take time. Global oil prices dropped to below $100 per barrel as the markets breathe a sigh of relief with the temporary reopening of the Strait of Hormuz. The World Bank sees slower economic growth for the Philippines, cutting its 2026 forecast to just 3.7%. HSBC Chief Economist Aris Dakanay joins us ahead. Small businesses are now struggling because of the Middle East conflict, with some of them already reducing manpower. The U.S. Iran ceasefire may have calmed markets, but that doesn't mean cheaper fuel just yet. The Department of Energy says any price relief, if it even comes, will take time to filter through. Here's Isaiah Marifuentes with our top story.
There is nothing to celebrate yet, even if ships with the Philippine flag are now allowed to pass through the Strait of Hormuz. Because according to Energy Secretary Sharon Guerin herself, the movement of crude oil prices is based on the situation in the Middle East.
I want to ask the DOE Secretary kung totoo po na may chance na aabot ng 200 pesos ang cost ng fuel natin, and kung totoo na hindi na bababa uli below 100 pesos. Is this true?
Mr. Chair, will it go up to 200? Honestly, I don't know, and I don't think anybody knows yet, because unfortunately we are so dependent on what's happening there. So it could happen, depending on what the two countries do, no? But will it go down to 100? And that's actually what we've been discussing.
She also explained that crude oil prices will not drop immediately, even if there is a ceasefire, because oil cannot be delivered to the country right away due to damaged oil infrastructure. Secretary Green also admitted that the country has only about 51 days of average oil supply left.
Having said that, Mr. Chair, on gasoline, we have 58 days, diesel 47.26, kerosene at 106 days, 66 days for jet fuel, fuel oil at 52, and then the lowest, Mr. Chair, is 33 days for LPG.
But around 1 million barrels of fuel have already arrived in the country, and this will add 10 more days to the national stock. According to House Speaker Bo JD, they remain committed to their mandate to protect Filipinos and strengthen the economy amid the crisis.
Hindi tayo magkakanya-kanya, bagkos tayo po ay magsasama-sama. This is exactly the kind of whole of government response our people expect. A Congress that has chosen to work with the executive to find lasting and forward-looking solutions.
Several cabinet officials and the chairs of 13 House committees were present at the hearing. In the presentation shown by Acting Chair's Party List Representative Antonio Tino, the Philippines ranks second in having the most expensive gasoline in the world and third in the most expensive diesel worldwide. According to the Department of Economy, Planning and Development, or DepDev, many people in the country could lose their job due to the crisis. Isaiah Marifuentes, Abante.
President Ferdinand Marcos Jr. sees a short window to act in this fragile two-week ceasefire between the U.S. and Iran. The plan is to build up fuel supply while shipping lanes are open. Marcos says if the Strait of Hormuz holds, more oil can flow, and that could help ease price pressures.
So we will take full advantage of the 2 weeks to increase our supply as much as possible, and to continue to make whatever arrangements are possible. We are all hoping and praying that the 2-week ceasefire will extend further if the talks go well. 2 weeks may not be enough time to bring the prices down, but maybe if it is extended further than that with the prospect of even better situation following, then prices will start to follow. We will, of course, immediately adjust.
Oil prices are easing, falling back below $100 a barrel as tensions between the U.S. and Iran cool for now. As of 8:26 this morning, Manila time, Brent crude is just above $97 a barrel, while West Texas Intermediate is trading at above 96. But prices are still elevated compared to pre-conflict levels, and markets remain cautious with uncertainty over whether U.S. President Donald Trump could make another move against Iran. If fuel excise taxes are suspended, pump prices could drop by as much as 11 pesos per liter. That's according to Finance Undersecretary Carlo Fermin Adriano, who said the decision on reducing or suspending the fuel excise tax could be announced next week. He confirms a recommendation has already been presented to the president.
Basically po sa excise tax, for instance sa diesel po, it's 6 pesos per liter. So kung isususpend nyo siya, yung 6 pesos, that's minus 6 pesos and the VAT on the 6 pesos, or more or less mga 6.7 pesos per liter, assuming ipapass on po yan sa consumers.
Yes.
Pagdating po sa gasoline, that's around 10 pesos per liter yung ating excise. So more or less, kung isasama mo yung VAT on excise, that's more or less 11 pesos per liter savings, assuming again ipapasa sa consumer.
But Adriano notes any tax relief will only last up to 3 months under the law. A lawmaker is pushing for tax relief amid high fuel prices. Batangas Representative Leandro Leviste wants to cut or even scrap the value-added tax on petroleum. He argues taxes are a big reason why fuel in the Philippines costs more than in many parts of Asia. While other countries help ease prices, he says our country ends up adding to that burden. And with limited room for subsidies or cash, he says cutting taxes may be the fastest way to deliver relief. Leviste is also urging Congress to at least lower the VAT from 12 to 10%. Fewer oil shipments are coming in as the Middle East crisis disrupts trade. Andrea Salve has the details.
Oil shipments entering the country dropped by 4% in March amid the war in Iran. Data from the Bureau of Customs shows a difference of more than 105,000 metric tons compared to the same month last year. Significant declines were recorded in crude oil, Jet A1 fuel, and Avgas 100 low lead. On the other hand, volumes of diesel, gasoline, LPG, and kerosene increased. Despite the overall decline in oil shipments, duties and tax collections for March rose by 19% or more than 4.96 billion pesos. No cancelled oil shipments have been reported so far. However, the Bureau of Customs has expressed concern over imported general merchandise.
Yung volume ng importation sa pangkalahatan, kasama na ang petroleum products, nag-decline tayo across the board lang, but kumbaga may specific items siya, nang hindi bababa sa 16 to 18%. Sana ngayong Abril, wag nang bumaba pa yung volume. Kasi pag bumaba yung volume, baka ang kasunod nun, yung pagtaas naman ng presyo.
For the month of April, from April 1 to 6, oil imports plunged by as much as 82% compared to the same period last year. A large portion of this drop was driven by declines in kerosene, gasoline, diesel, and LPG volumes. The Energy Department assured the public there is enough domestic oil supply. Andrea Salve, Bilyonaryo News Channel.
The global conflict is now starting to affect a basic Filipino staple, rice. Higher fertilizer prices driven by tensions in the Middle East could slow down local production, and that could put pressure both on supply and on prices. Hannah T has the details.
The conflict in the Middle East is now threatening rice production. The Department of Agriculture says higher fertilizer prices could cut output by 20 to 50%. This could kick in during the May to June planting season, and the DA expects the impact to show up in supply after a few months.
And so what will be affected will be the production come September, August, during that month. And it's around 10 million metric tons of rice.
The country is currently producing only about 78% of its rice requirement. Imports may also become more difficult as some countries are now limiting their supply due to the crisis.
The value that we are projecting to lose, assuming we don't do anything, the cost of inaction for 3 major crops alone, and I'm talking about rice, corn, and fisheries, is already 75 billion pesos.
The DA is proposing subsidies for the agriculture sector, particularly for fertilizer and fuel. Out of around 11 million farmers and fisherfolk, about 6 to 7 million use fertilizer and fuel. The DA says it needs around 37 billion pesos, enough to cover just 3 months.
Ang laki po niyan. Kung i-add mo lahat ng ayuda programs, abot ka ng 200 billion. Hindi ho ba ngayon dapat yung panahon na gamitin yung perang yan? No, ngayon po yung panahon para ilabas yung perang yan, matulungan natin itong mga kasama natin, mga kababayan natin na nagpapakain sa atin.
The DOF says it will study how existing aid programs can be accessed for the DA's request, while Senator Bam Aquino said Congress is ready to respond to any budget request. Some fishing operations have also started to stop, according to a federation in Soxargen. Out of more than 100 members in their group, 4 to 5 companies have already reduced or halted operations. They say they're still trying to give allowances to workers, but this is becoming hard to sustain as oil prices have nearly tripled and now account for about 75 to 85% of their operating costs.
Please help us keep these boats running. Please help us keep the food accessible and affordable. And please help us respond to this crisis before it goes irreversible po. Because once these boats stop, hindi po to agad may babalik.
And even if fishers still go out to sea, they say they only end up losing money if there's no cash. Hannah Tia, Bilyonaryo News Channel.
High fuel prices are starting to affect travel, and in Baguio, that means fewer tourists this summer. The result, small businesses are taking a big hit. Dobie de Guzman has this story.
Gasoline stations in Baguio City are struggling with poor sales. Drivers are also refusing to travel, resulting in longer lines at jeepney terminals. At the city market, vendors are scratching their heads.
Hindi naman actually parang yan eh. Pero ganito yung nangyayari sa atin.
Coffee shops, restaurants, hotels, and other tourism-related establishments are also suffering from the blow of the continuing oil increase.
Pag ganun po yung situation, syempre sir, baka kung yung mga ibang kasama namin, siguro baka hindi na makapasok, mga ganyan. Baka maging apekto yung bumaba po yung manpower.
Because of rising fuel prices, tourist arrivals in Baguio dropped to 50%. To cut down on costs and keep their businesses afloat, some businesses are appealing to workers to take fewer shifts or go on rotating schedules.
Ang una-una kasi ang pinakamalakas na expenses sa isang business is the manpower. Which yan ang number 1 na pinakamalaking expenses. So, kinusap namin yung mga staff, maybe sa isang linggo, pwede kayo mag-work ng 5 days, pero hindi namin sila aalisin. Okay. So, alternate sila.
For the Baguio Business Club, no worker should lose a job during a crisis, saying what they should get is assistance instead.
Ating mga trabahador ngayon is nagbabiyahe mula sa kanilang mga pamamahay hanggang sa construction site. At sa tingin ko, ang malaking tulong is magbigay ng tulong sa kanilang transportasyon. Magbigay din ng subsidy na magbigay sa kanila ng mga kakailangan nila, kaya ng mga essential goods, bigas.
We used local products muna because what we noticed is mura ngayon ng mga gulay. So we featured Baguio vegetables.
Because of the economic impact of the oil crisis, Baguio is now under state of calamity. Dobie de Guzman, Bilyonaryo News Channel.
We're taking a quick break. Business 360 will be right back. Welcome back. The global backdrop is getting tougher and the Philippines is feeling it. The World Bank now cuts its 2026 growth forecast to just 3.7%. The main risk, rising oil prices. The report says higher fuel, energy, and fertilizer costs are pushing up transport and food prices while eroding household buying power. Across the region, growth is also expected to slow to 4.2% this year from 4.2% in 2026 from 5%. Now, if the conflicts drag on, household incomes could drop by as much as 4%. The bottom line, global shocks are starting to feed directly into local costs, adding pressure on both households and businesses. Oil prices are starting to ease after the Middle East ceasefire, but for the Philippines, which imports nearly all of its fuel, the real question is, will that relief actually be felt with inflation still at 4.1%? Pressure is on households, and it's a tough environment. Joining us now is HSBC ASEAN economist Aris Dakanay. Hi, Aris. Welcome to Business 360.
Hello, Ms. Maiki. Thank you for having me.
Okay, Aris, let's start with a global development and then let's bring it home. There's a fragile 2-week ceasefire in the Middle East, and oil prices have eased below $100 per barrel. But we import about 95 to 98% nearly all of our fuel, and inflation is already at 4.1%. Will Filipino households feel any relief at all, given, of course, that apart from the first round, there's big secondary waves of inflation?
Well, the first point that we have to raise is that we still don't know where global oil prices will actually go up. Yes, there is a 2-week ceasefire, but it could still go to any directions. We do hope that the negotiations are successful, that we do find a peaceful resolution to open the Strait of Hormuz. But even then, even if the Strait of Hormuz is open, there are, as you mentioned, secondary effects that needs to be considered. What are these secondary effects? It's secondary effects that are focused on fertilizer. So it doesn't get the same attention as energy, but fertilizer, or at least the components of fertilizers, are actually byproducts of processing fuel, processing fossil fuels, processing natural gas. Did you know that seaborne trade of fertilizer, a third of that actually passes through the Strait of Hormuz, and fertilizer prices have already gone up by 20 to 50%.
Mm-hmm. Yeah, that's right. Fertilizer costs up 20 to 40%. That's a huge increase. And the question is now, will costs become permanently higher as a result of this? Prices go up quickly, but they go down so slowly, if at all. And that's the question, if at all. Aris, tell us more about this disconnect.
I do think there is a risk that inflation expectations, I wouldn't say disanchored, but for prices to be higher for longer after the scenario. And I think it will happen. There is a delayed impact. That is why it's a secondary effects. These higher fertilizer prices will eventually show in our food prices, in our food budgets, maybe in 2 or 3 months' time. And of course, food is, I would say, more sensitive to the Filipino consumer than, say, oil prices. And that would may introduce, higher pressure for minimum wage hikes, for transport fare hikes, for businesses to increase their costs. And these are the things that may lead to higher inflation expectations that the BSP will need to monitor.
Yeah, that's the thing. These secondary effects haven't all been punched in just yet. There have been delays in fuel hikes. That said, let's talk about expectation risks. The BSP warns that inflation could become disanchored. At what point does inflation start becoming self-sustaining?
The inflation becomes self-sustaining when there's a wage price spiral. When wages are increasing at the same rate or higher than inflation, and inflation then increases at the same rate as wages without that much growth, when the economy is not producing more goods. So that was when growth is low, but at the same time, inflation and wages are high. As we see right now, that's not really the case. Fortunately enough, wages in the Philippines in 2025 grew by 7%, while inflation was 1%. But let's see, it's something that we need to monitor. we need to monitor the pressure of raising minimum wages in the Philippines, and if it does increase business costs without businesses producing more goods, then the BSP will need to take action.
Yeah, let's talk about that inflation path. March inflation came in at 4.1%, Aris, above expectations. And the question is, are we even near the peak, or is more pressure, already locked in? And I guess the question is, it all depends on where oil goes. If it stays above $110 to $120 per barrel, for example, until June, how high could inflation become from 4.1% in March?
That's the difficult part of being an economist nowadays. There are just so many scenarios that we need to predict, so many scenarios that we need to forecast. But let's just assume that oil prices are sustained at 80 to 90 a barrel. We do think inflation could rise to as much as 5% or a little below 5%, which I think is a lot more manageable if oil prices, let's say, stay at 110 and 120. If it does go up to 110 to 120 or just above 100, up until June, inflation can be a deja vu, as when the oil shock in 2022, when inflation peaked at around 8%.
Mm-hmm. Oh my gosh, yeah, 8% inflation. That's a scary scenario, Aris. And which brings us to the inflation outlook. Policy rates were held steady at 4.25% at an off-cycle meeting. The BSP's Monetary Board is going to be meeting again on April 23rd. With the 4.1% inflation surprise, how does the interest rate path change for the year?
So 4.1% actually exceeds the BSP's month-ahead forecast of, I think, if I remember correctly, 3.1 to 3.9%. And at 4.1%, we still need to take into consideration the secondary effects. Although there are uncertainty as to what is ahead, we do know that inflation is set to be higher. BSP's full-year forecast is, I think, at around 4.5%, which is above the BSP's target range. So monetary action may be needed to at least, support the peso and prevent import inflation from becoming worse. So we do think to make sure that inflation is anchored, you have to at least raise interest rates back up to neutral levels. Mm-hmm. And we do think it's around 4.75 to 5%. So even with oil prices at 90, we do think the BSP will hike rates by 25 basis points in April and another one in the road along 2026.
Yeah, okay. That sounds very prudent. Another thing I want to talk about is the fragility of the market. Markets rallied as a knee-jerk reaction to the ceasefire. The peso strengthened to 59.43 to the dollar. The PSE index jumped over 2%. But this is just anchored on a two-week pause in tensions. Given that, how fragile would you say this rally is, Aris?
I would have to say there is a lot of uncertainty. I hope I am wrong, but I do go back to what I said earlier, that with anyone that has conviction of whatever will happen in the Strait of Hormuz, I think that conviction needs to be met with some degree of scrutiny. We're still not sure the Asian currencies, not just the peso, remains on fragile ground. A lot of the financial markets remain on fragile ground, and we are monitoring, Mr. Trump's Twitter account, X account, what the Bloomberg News, to see what is happening ahead.
Yeah, speaking of what's happening ahead, we're taking a look at GDP. The World Bank expects GDP for 2026 to come in at 3.7%. As growth in the region is slowing, they project regional growth to slow to 4.2%. You guys at HSBC, you expect growth to slow to 4.4% in 2026. This against a higher, upside risks to inflation. Taking this into consideration, plus infrastructure spending dropped to 1.32 trillion pesos in 2025. That's down 14.3% below target, of course, due to delays linked to the flood control scandal. Is this becoming a broader slowdown story rather than just an inflation story, Aris?
I hope not. I do think that there are, or at least the government is currently undergoing a lot of institutional reform to be able to bring public trust back up. And when public trust is back up, spending can finally resume. Our forecast for 2026 is at 4.4%, which is below government target, higher than the World Bank, but it actually assumes that oil prices will remain at 80 to 90 from May up until 2027. But let's just assume that oil prices can go up to around 110, 120 up until June. We do have a secondary scenario wherein growth could go to as low as 3.8%, which is similar to what the World Bank says. We do have to consider the fact that rice prices have gone higher. Around 9% of our budget, or at least a Filipino consumer's budget, is actually on rice. With rice prices currently at 47, we do think that purchasing power of the Filipino people may be a challenge in 2026.
Yeah, it is a challenge. We're seeing changes in spending behavior. You, Aris, you come to us from Hong Kong, so you don't see how traffic has decreased on the streets, but everybody's talking about the decrease in traffic on the streets. Earlier in the newscast, we had a report about not many people are going to Baguio anymore for the summer holiday, and it's affecting the smaller businesses there. Household spending drives 70% of our economy. As we see signs of people coming back, where specifically, Aris, do you see them cutting back first, apart from transport?
Coming back, I have to say though, with the uncertainty ahead and with slower public infrastructure spending, which, mind you, a tenth of the Filipino workforce is actually in construction and is directly affected by slower public infrastructure spending, we do think consumers will likely feel a lot more burden or a lot more challenge in 2026 as compared to the previous 2 years. The labor unemployment has risen, prices have gone up. And I have an office mate here who's also from Baguio, and as mentioned in the news, businesses in Baguio is also slowing down. So I do think it is a natural reaction for Filipinos, and rightfully so, to cut back on spending, to save, because you have to save up for the uncertainties ahead. You don't know how much more prices would go up. You don't know whether your wages will be able to rise up commensurately. So saving will be the best choice of action.
Yeah, and it's hard to increase wages in this kind of environment, although that clamor will be there, rightfully so. Let's talk about the near-term realities and the fixes. The government is feeling the pressure. They're trying to do what we can. Next week, Finance Undersecretary Adriano says that there's going to be a decision on fuel taxes, whether or not they're going to be suspended, possibly for a 3-month period, as pump prices could drop with this cut in excise taxes by as much as 11 pesos per liter. On the other hand, we've got another lawmaker pushing for tax relief amid the high prices. Batangas Representative Leandro Levista wants to cut or even scrap the value-added tax on petroleum. What are your thoughts on, the fixes that can be put in place at this time? And then the consequences, of course.
Let's first tackle the excise tax cut. The excise tax cut can immediately provide release to households, but the degree of relief might be incommensurate or small as compared to the rise in diesel prices. Diesel prices today are currently at around 130, 170 pesos per liter. Correct me if I'm wrong, gasoline prices are between 90 to 110. Excise taxes is just 6 pesos, and gasoline excise tax is just 10 pesos. So yes, it does provide the relief, but it's really not enough to be able to completely save consumers when it comes to the surge of global oil prices. When it comes to the VAT, we do have to take into consideration that if you cut VAT, debt to GDP, or at least debt of the government, will likely increase, which of course future generations of Filipinos will need to find a way to actually pay for that increase. So whatever cut there is, may it be excise or VAT, I do think at the least there should be this guarantee that there are certain conditions that when certain conditions are met, these taxes need to go back up to make sure we protect the purchasing power of the future of the Philippines.
Yeah. And Aris, I also want to leverage on the fact that you are HSBC's ASEAN economist. So I want to also get your read on how we compare. Are Filipinos feeling the same pressures, or are we feeling more pressures? We import nearly all of our oil. So we're pretty exposed to this. How is our exposure relative to that of our peers in Southeast Asia? And are Filipinos feeling the same amount of pressures or more because of our dependence on oil?
So let's put the 5 ASEAN countries together in one lump. That is Malaysia, Indonesia, Thailand, Vietnam, and the Philippines. Now let's put aside Malaysia and Indonesia because they are energy producers, and Malaysia in particular is a net exporter of energy. So they're not really there. If they're, I would have to say, fully insulated from this oil shock. So let's focus on Vietnam, Philippines, and Thailand. What Thailand has is what you call the oil fuel fund. So diesel prices in Thailand is more or less, I would have to say, stable, because what they do is that when oil prices are high, they subsidize oil prices using the oil fuel fund, but they don't cut gasoline prices or diesel prices when global rice prices is low, because they use the surplus there to pay for the debt that they had before. So structurally, they have the tools to keep energy prices stable. For Vietnam in particular, it's actually in the same boat as the Philippines. Vietnam also imports a big portion of their oil needs abroad, particularly the Middle East. But debt to GDP, ang utang po ng Vietnam ay mas maliit po kaysa sa Pilipinas. So they do have the fiscal room to be more forceful when it comes to subsidies, when it comes to the fiscal tools to be able to stabilize oil prices. The Philippines, on the other hand, our debt to GDP is currently above 60%. We do not have the same fiscal room as Vietnam, making us a little bit more exposed to Vietnam when it comes to managing this oil shock.
Mm-hmm. Yeah, and Aris, before we go, I want to ask you one more question for our younger viewers, maybe Gen Z, Gen Alpha. How would you describe the depth of this shock to our economy to them?
Oh, wow. For the Gen Zs, I hope I look Gen Z, but I'm far from being Gen Z, and I'm having a hard time being able to relate. But if it's similar, just look at 2022 and how the Philippines went through. So with your AI tools, just ask, I don't know, ChatGPT, DeepSeek, how was the Philippines back in 2022, and what did the Philippines do?
Well,
I think that's your closest scenario.
Okay, that is a very 2026 answer. Take it back to AI and give them a good prompt and ask them to explain it to someone of that age group. Anyway, Aris Dakanay, joining us from Hong Kong, from HSBC, maraming salamat.
Thank you.
We're taking a quick break. Business 360 will be right back.
Well, this is not our fault. This is not our plan.
They'll never be able to recover, ever.
We continue to raise the alarm over the humanitarian impact of escalating violence across parts of the Middle East.
Uulitin po natin, ang utos ng Pangulo ay asikasuhin ang lahat ng ating mga kababayan, lalong-lalo na yung mga naiipit sa Middle East.
The conflicts, the surge in fuel prices, the effects on energy distribution.
That I declared an energy emergency.
Is we have supply.
These are conversations that we can't just shy away from. So, we open the floor for meaningful insights that will help us navigate through these challenges. Power Shift, beginning this April 8, Wednesday, 8 p.m. on Bilyonaryo News Channel.
Well, this is not our fault. This is not our plan.
They'll never be able to recover, ever.
We continue to raise the alarm over the humanitarian impact of escalating violence across parts of the Middle East.
Uulitin po natin, ang utos ng Pangulo ay asikasuhin ang lahat ng ating mga kababayan, lalong-lalo na yung mga naiipit sa Middle East.
I'm Paulo de Rosario. This is Shift Happens.
Welcome back. If you pass EDSA every day, this could change your commute. The government is now speeding up the long-delayed rehabilitation of Metro Manila's main highway, a project meant to fix worn-out lanes and ease daily congestion. The Department of Public Works and Highways, or DPWH, says the project will now take about a year, cut from the original 2.5-year plan. It's also cheaper, down to 5.8 billion pesos from 17 billion pesos. Secretary Vince Dizon says the earlier plan was scrapped for being too slow and too costly. President Ferdinand Marcos Jr. ordered a faster, more efficient fix for a road millions rely on every single day. Another major transport project is now back on track. The government now targets to complete the long-delayed unified Grand Central Station by the second quarter of 2027. This comes after the original contractor was dropped over prolonged delays. The 2.8 billion peso project, in the works since 2009, will connect LRT-1, MRT-3, MRT-7, and the Metro Manila subway in one central hub. To move things forward, the Transport Department has brought in Light Rail Manila Corporation and Sumitomo Corporation to take over construction. Their goal, make transfers faster and less chaotic along one of Metro Manila's busiest corridors in time for the partial opening of MRT-7. Government infraspending is losing momentum at a time when the economy needs more support. Total spending falls to 1.32 trillion pesos in 2025, missing targets amid disruptions linked to the flood control scandal. Disbursements are now down 14.3% from last year and well below the 1.51 trillion peso program. The main drivers, weaker spending by the Department of Public Works and Highways, or DPWH, and project delays as validation rules were tightened. The slowdown is also linked to corruption issues that held back project rollouts and payments, along with bad weather that disrupted construction. In the end, infraspending lands at 4.7% of GDP, lower than last year and below target. And that matters because infraspending is a key driver of growth, jobs, and overall business activity. In other news, a new LPG terminal is coming online aimed at strengthening our country's energy supply. The Isla Group has inaugurated its largest and most advanced facility in Batangas City after more than a decade in development. The facility, Isla Import Terminals Incorporated, will serve as the main hub for Solane's distribution network, linking global supply to local demand. The company says the terminal will expand capacity, improve shipping and logistics, and open up more sources of supply beyond the Persian Gulf. The goal, deliver LPG more efficiently across the country to help meet the rising energy demand. Up next, global markets, what's moving and why. Keep it here on Business 360.
We pay tribute to the bravery of heroes who stood their ground to fight for life and freedom. Araw ng Kagitingan, Bilyonaryo News Channel. Anton Rojas. The Scorecard, 10 p.m. on BNC, the Bilyonaryo News Channel.
Before, but unrecorded. So itong usok, this was the first approach ng reggae sa Pilipinas na recorded. Huwag mong sayangin ang panahon, pagkat ito'y may hangganan.
Your new favorite night starts here, only on Bilyonaryo News Channel. Some shows give you noise. This one hits different. Join Matteo Guidicelli for conversations that go deeper.
For mental awareness.
Games that keep the vibe fun. And stories that actually matter.
Madalas wala ka sa mood eh. Sinaral kong gumawa ng kanta kahit wala ako sa mood.
Matteo G Primetime. Smart.
Authenticity for me is key.
Funny.
Kamay-kamay lang yan. Bawal din ito.
Unexpected.
Subukan mo.
Welcome back. Let's take a look at how global markets performed overnight. Wall Street closed sharply higher as a last-minute two-week ceasefire between the United States and Iran sparked a relief rally. The Dow Jones Industrial Average up by 3%, and the S&P 500, there we go. Dow Jones Industrial Average higher by almost 3%, S&P 500 higher by 2.5%, and the Nasdaq up by 2.8%. Over in Europe, markets closed sharply higher as well. The UK's FTSE 100 up by 2.5%, Germany's DAX up by 5.1%, and France's CAC 40 up by 4.5%. Let's take a quick look at the markets here in Asia. The Philippine Stock Exchange is closed today for the Day of Valor or for the Araw ng Kagitingan holiday. Though the PSE joined the market rally yesterday, trading above 2% to the 6,000 level as the U.S. Iran ceasefire eased sentiment. Meanwhile, let's check on how other markets are doing this morning. Right now, the Nikkei 225 is trading to the downside, down by 0.6%. Hong Kong's Hang Seng Index in the red as well, lower by 0.4%. Shanghai's Composite down by 0.6%, and Singapore's Straits Times Index down by 0.3%. In other news, Pru Life UK, one of the country's leading life insurance companies, is urging Filipino investors to look beyond the local market as volatility and concentration risks build. The company has launched the PruLink Strategic Income Fund, a global multi-asset, multi-manager fund that invests across different markets and sectors. It says the goal is to reduce overexposure to the Philippines while delivering more stable returns in an uncertain environment. The fund is part of a broader push to expand investment options and guide Filipino investors towards more diversified portfolios. And a new kind of credit card is entering our market, targeting Filipinos who are still outside the formal credit system. Asia United Bank, or AUB, along with MasterCard and Finvolution, has launched an installment-based card as competition heats up in digital lending. Called the Love It card, it lets users split purchases into installments through a mobile app, even for those with limited or no credit history. The product uses AI-based credit scoring to speed up approvals, a model now being pushed across the industry to reach first-time borrowers. The timing matters as more Filipinos turn to digital payments and flexible credit, but also face higher costs and tighter cash flow. Now, before we go, the Artemis 2 crew is now heading home after a historic journey around the moon. The mission is part of NASA's push to return humans to the lunar surface for the first time since the Apollo program. NASA says the astronauts traveled more than 250,000 miles from Earth, the farthest humans have gone in decades. They also completed a rare flyby of the moon's far side, a view not seen by humans since the Apollo era. On flight day 7, the crew checked in with astronauts aboard the International Space Station, sharing their view of Earth from deep space. The 10-day mission is set to end on April 10th with a splashdown in the Pacific Ocean. And that's it for Business 360. I'm Maiki Oreta. Thank you for joining us, and keep it here on BNC, the Bilyonaryo News Channel.